after the so-called weaponization of the dollar, by the way, by Biden, not Trump, in response to the second invasion of Ukraine by Russia. You don't have to be an enemy of the United States or axis of evil or anything like that. Like, everybody got the memo at that point, like, holy cow, the United States can on its own just choke off our financial lifeblood. The SWIFT system goes through New York, and relying on US treasuries always seems so safe, think assets can be frozen. I mean, this wasn't just a wake-up call. I see this as a paradigm shift, a one-way door the world has stepped through. And even if the war on Ukraine ends and Trump and Putin kiss and make up and everybody lives happily ever after, that's not going to happen. But if something along those lines happen, I don't think either China or Russia or really anybody else would say, oh, well, let's go back to the way things were before 2022. We're okay with having Washington and New York control our finances. I don't see that happening. And so the central bank buying, it can't go on forever, but it is a huge offtake that just wasn't there before. And I suppose I say it can't go on forever, but if they keep printing, it can. You can print worthless fiat and exchange it for something physical that has value in the real world. Maybe you do keep going until you end up in a hyperinflationary environment. I'm not predicting that. I'm just saying that, every time gold hits a new high, there's a lot of people come running out and saying, oh, this is it. That's the peak. Now it's got to correct from here. And it seems like, and I'm not saying that the gold can go to the moon and beyond to the stars or whatever, but it is a fact that every time this has happened and this chorus has come out of, oh, that's the peak at 2000. Oh, no, well, that's the peak at 2500. Oh, no, this is the peak at 3000. That's way too high, too fast. And, 3,500. Oh, well, this is outrageous. This is ridiculous. Gold is not worth that much, blah, blah, blah. Every time. And now here we are looking at 37 in the face, closer to 4,000 to 3,000. I don't know where it peaks. I'm not saying there can't be a correction. What I am saying is that it's clear to me that the game has changed.
Hey everyone, and welcome to another episode of the What the Finance podcast. On this episode, I have the pleasure of welcoming on Lobo Tiggre for the very first time. So Lobo is from the Independent Speculator. So Lobo, thanks so much for coming back on the podcast today.
Happy to be on the show.
Looking forward to it. Yeah, I've been a fan of your work and really enjoy your insights. So glad to have you on. And where I like to sort of start with all my interviews is just very broad. So what are you currently seeing in the economy and the macro at the moment?
Well, the big picture is not very exclusive to me. I think basically everything I see going around the world is all inflationary. The Trump agenda, and this is not a criticism nor praise of the Trump agenda. I was just trying to be objectively evaluating it. But it's highly inflationary. Even without the big, beautiful bill, it's highly inflationary. But with it, all the more so. The rearmament of Europe, highly inflationary. Constant Chinese stimuli to try to, prop up the economy without lighting another, real estate bubble, highly inflationary. Russia's war, highly inflationary. So, or maybe the broadest trend of them all, this partial deglobalization, that's inflationary too. It's less efficient. Things are going to cost more. And yes, Austrian economists out there, I understand that inflation is a monetary phenomenon, but when markets react, they react to consumer prices, and I get the relationship. I'm just saying that what's going on in the world, highly inflationary. And that's bad, but the good news is that it's good for real assets, and that includes, obviously, monetary metals, gold and silver.
Okay, great. Yeah, great place to start. And do you see, so I guess, inflation has been creeping up in the US, and I think it's been creeping up more in sort of other parts of, the UK, Europe, other parts of the world. So you see that sort of, I guess, 6 months ago was almost like a bottom, and now it's just going to keep going up. And I don't know, do you have any expectations on how high it will go, or do you think it'll be more sort of 4 or 5%?
I'm happy just to get the direction right. But it's really interesting because in the US, there's a lot of chatter about, we've got inflation's going the wrong direction. And, of all the different measures, the Fed says that it prefers so-called core PCE, which is now within kissing distance of 3%, which may not sound high, But given the non-inflation we've had, or at least non-reported CPI and PCE we've had for so long, that is high. And it's also freaking 50% above their targets. So yeah, that's high and it's going the wrong direction. The narrative in the US, though, is, oh, this is all just a temporary, not to say transitory, pass-through effect from the tariffs. But notice in the way you framed the question, it's not just the US. It's the inflation is going the wrong way in Europe. The UK is sort of the poster child of stagflation right now, but they're using that dreaded S word in the United States as well. So this is a global phenomenon, and that, at least makes it reasonable to question the narrative in the US of, oh, this is just all the tariffs and it's just transitory. And by the way, even if it is a one-time transitory hit from the tariffs, prices still go up. Economists like to, there's a major disconnect between normal people and economists. And economists understand that inflation is a rate of change. And so, yes, if the rate of change goes down, economists celebrate because it's not going up. But the person shopping for groceries, they don't care if the rate's going down, or they don't care if the rate is zero. If their groceries are more expensive than a year ago, they're not happy. And by the way, they vote. So, this has a lot of implications. But as a resource speculator, the main thing is not just rah, rah, rah gold. It's actually, this is bullish for everything real, is how I started. That includes your industrial metals, copper, energy minerals, and there's pain and economic uncertainty to work through on the way there. But longer term, the mega trend that I started this conversation with is that I think that we're looking for higher prices, or looking at higher prices in anything real, anything physically constrained, anything a government can't print or imagine into existence by fiat. I think we're looking at a longer term secular bull market.
Yeah, it's a great point. And I think if you look at energy, which was a major driver of inflation back in 2022, and that's come down massively. I guess, Henry Hub has gone up a little bit in the US and it's come down, but Brent and WTI, it's at $60 a barrel, and yet there's still inflation's above,
yes,
almost
3%. It's quite interesting how oil has come off so much and inflation remains high. It's really interesting that, we've, as we record, I don't know when you'll post this, as we record, we just had Israel bomb Hamas, muckety-mucks in Qatar. And, a year or two ago, or pre-October 6th, something like that would have had oil up like $5-10 on the day or something. And now markets are, okay, it's up 2% or something. Last I checked, that's really a modest move for that kind of hot exchange in the Middle East. And there are a couple of things to go with from there. One, it tells you something about how oversupplied the oil market is. So while I'm bullish on all things real, including hydrocarbons, it's the kind of thing that's economically sensitive. And so in the near term, there's a concern as the world adapts to Trump shock, and the economic knock-on effects of that are felt and work their way through the real economy. That's near-term bearish on oil and even copper, which I'm very, very bullish on, even more so than oil. But in the near term, as these shocks work their way through, let's just say there's reason to expect some shopping opportunities in the near term for these economic inputs, even the most critical, vital industrial inputs like oil and copper. So that's one thing. It tells us something that's even, hot exchanges in the Middle East can't get oil above $65 a barrel. It tells you how much oil there is out there. And, OPEC sort of reopening the floodgates, even though prices were still down, that's really something. So, investors, beware of this. You can't just buy into the big macro thesis. Oh, money printer go burr, therefore buy everything else. Maybe if you're very patient, that works out, but in the near term and in even the year or two ahead, that may not lift all ships. So, we started with the big macro picture. My outlook is inflationary going forward. That's bullish for everything real. But, in the near term, or actually not just like tomorrow or this quarter, but in the next year or so, I'm much more discriminating in what I want to invest in. And so I'm not willing to just go from the theory, or like our friend Rick Rule likes to say, don't confuse the inevitable with the imminent. And my riff on that is, forget about inevitable or even imminent. I want to know what's happening now. And so what's happening in the near term is actually near-term bearish for other commodities, but happily not bearish for monetary metals, gold and silver. And there is one exception, and that's uranium. I don't know if you want to go down that other yellow metal road or not, but it is an industrial input. It is an energy mineral, and sometimes spot uranium prices get whacked around by, there's sort of the macro narrative. Oh, this is bad for energy. But the facts are, if you look at it, uranium has gone sideways to upwards in 3 of the last 4 recessions. And the one where it didn't, that was after the 2007 big spike in uranium. And so it was already sliding down sharply when the crash of 2008 hit. So arguably the one time that uranium dropped during a recession, it wasn't because of the recession. It already was.
Yeah, great point. And I think if we get, if we stay on oil, it seems like it's just a supply issue versus demand. The demand isn't growing that much because global economy is weak. China's sort of not demanding as much. And it seems like there's lots of non-OPEC supply coming online as well in the next Q4 and then early Q1 next year. So I think it looks like after early next year, the supply demand dynamics may change, but currently it's
yeah, it may,
too
which
much
makes it
supply.
really
OPEC comes online. Yeah.
Sorry, Anthony. I mean, you're
Yeah.
quite right, but it makes it really interesting that OPEC made that decision. Not only did they continue with, ramping back up on their voluntary supply constraints, but like they quadrupled the rate just a couple months ago. Why would you do that? And you might say, oh, well, they're just going for market share. They're trying to put all the US shale out of business so that they can, crank up the prices later. Maybe. But the timing is really, like, you would think you would do that when you have a bit more control over the market. To do that in a weak market is, I mean, they're gonna they're gonna feel a lot of pain on their own. And another explanation is, a lot of those countries have relied on their oil revenue as the ever refilling piggy bank. Sort of renewable energy, if you will, renewable piggy bank. And if you restrain yourself from tapping into that piggy bank for 1 year, 2 years, how long can you do that before you start facing social unrest at home? So it may not be the 4D chess that people imagine OPEC to be playing. It could just be simple necessity, if not desperation, on the home front in certain countries.
But yeah, as you said, monetary metals has really sort of benefited in recently. They seem to be outperforming, and it seems to be also linked to deficits. There's a lot of concern about deficits around the world. US obviously, but France today, they sort of government collapse. This interview will be going out tomorrow, so it'll still be relevant, I hope. And the UK is extremely struggling. So it does seem like there's people are starting to lose faith, or investors are starting to lose faith in, I guess, government bonds as a safe haven because they've performed horribly over the last 4 or 5 years, and they're shifting to gold.
Yeah, I'm not disagreeing, but I don't think the data is very clear on that. Just last Friday, when gold popped on the surprise non-farm payroll, surprise miss there, surprise only to people who weren't paying attention. But anyway, at least the U.S. 10-year note went up. Like, rates went down, bonds went up at the same time that gold did. So it's not a one-on-one thing. I agree that on a broader perspective, that seems to be a trend around the world. But as regards monetary metals, and particularly gold, you also have the central bank buying, which is a big deal. And there's a lot. We could probably spend a whole show on just that. But I think the key points on that are, after the so-called weaponization of the dollar, by the way, by Biden, not Trump, in response to the second invasion of Ukraine by Russia. You don't have to be an enemy of the United States or axis of evil or anything like that. Like, everybody got the memo at that point. Like, holy cow, the United States can, on its own, just choke off our financial lifeblood. The SWIFT system goes through New York, and relying on U.S. Treasuries always seems so safe. Think assets can be frozen. I mean, this wasn't just a wake-up call. I see this as a paradigm shift, a one-way door the world has stepped through. And even if the war on Ukraine ends and Trump and Putin kiss and make up and everybody lives happily ever after, that's not going to happen. But if something along those lines happen, I don't think either China or Russia or really anybody else would say, oh, Well, let's go back to the way things were before 2022. We're okay with having Washington and New York control our finances. I don't see that happening. And so this central bank buying, it can't go on forever, but it is a huge offtake that just wasn't there before. And I suppose I say it can't go on forever, but if they keep printing, it can. You can print worthless fiat and exchange it for something physical that has value in the real world. Maybe you do keep going until you end up in a hyperinflationary environment. I'm not predicting that. I'm just saying that, every time gold hits a new high, there's a lot of people come running out and saying, "Oh, this is it. That's the peak. Now it's got to correct from here." And it seems like, and I'm not saying that the gold can go to the moon and beyond to the stars or whatever, but it is a fact that every time this has happened and this chorus has come out of, "Oh, that's the peak at 2000. Oh, no, well, that's the peak at 2500. Oh, no, this is the peak at 3000. That's way too high, too fast." And 3500, oh, well, this is outrageous, this is ridiculous, gold is not worth that much, blah blah blah. Every time. And now here we are looking at 37 in the face, closer to 4000 to 3000. I don't know where it peaks. I'm not saying there can't be a correction. What I am saying is that it's clear to me that the game has changed, and one of the aspects of this is clearly the central bank buying, which puts if not a floor, it backstops the 2 steps forward that we keep taking. And I don't know if you want to jump in with a question there, Anthony, or not, but I think that is one major thing. And I do think that we're starting to see something we really haven't seen for decades. And that is, again, quoting our friend Rick Rule, he likes to say that the average global allocation to gold, the average portfolio allocation globally for like 5 decades or something has been 2%. But recently it's been 0.5%. Like nobody had any gold. So a reversion to mean would 4x 4 times, not foreign exchange, would 4 times the investment demand for gold. And people have been saying, well, when is that going to happen? When is it going to happen? I don't know if it'll ever happen. But even if it only goes back to halfway, to 1% rather than 2%, that still doubles your investment demand. So sorry to rattle on, but there's evidence that this may be happening now. I see it anecdotally in interviews on Bloomberg or other mainstream financial outlets, where the host will ask people what they're doing and they'll talk about their various strategies. And then they'll often throw in, almost apologetically, "Oh, yeah, and we've got a little bit of gold to hedge as well." That just wasn't happening a couple of years ago. So that's anecdotal. More, I don't have a statistic, but maybe a little more substantial. If you look at how gold has become a crowded trade amongst institutional investors in the West, that's really interesting. That wasn't there before. We still don't have retail participation, which is another reason why I'm not calling a top yet in gold. We don't have that mania blow-off type market that we've seen in the past. And by the way, yes, I was just a kid back in the 1980 peak, but I was there and I was participating. I was buying silver, the poor man's gold at the time. But I was definitely following it. And it's not like that today. I mean, I'm a shoe shine boy. I'm the lawnmower kid, right? And I'm buying my silver rounds. The lawnmower kid has never even heard of gold or silver this time around yet. So, I do think that eventual blow off peak to this broader market move is still ahead of us. And that leaves us in this interesting point of, if that allocation that Rick Rule has been talking about for so long, if that's starting to happen, if this crowded trade on Wall Street into gold with all these guys saying, "Yeah, and we're hedging with a bit of gold," if that's the beginning of that reversion to mean that Rick has talked about, that's a big deal. And that alone could take gold higher. Again, I don't want to come across like a perma-bull gold bug who's always saying gold's going to the moon. In fact, last year gold was my top pick for the year. This year it's actually copper. And in the year before it was uranium. So I'm not the proverbial broken clock here saying yay gold. I'm saying that in spite of my broad view of many different things, I see the central bank game changer as one important factor, and I see the institutional buy-in in the beginning, perhaps, of this reversion to mean as another big factor. And these things have nothing to do with whether the Fed is going to cut a 1/4 point or not, or whether the bond rate is doing this. I mean, you hear what I'm saying? Like the main factors, if you run a correlation between the number one driver with gold and what used to be not the dollar directly, but real rates, real US rates were the most predictive factor for gold. And that has broken down in recent years. So takeaways are beware of relying on, what used to work in recent years, the previous charts, and beware of excessive bullishness. But also, you don't want to just sell out because, maybe the top is near. Nobody knows where the top is.
Yeah, it's a great point. I was listening to a podcast the other day, and they were saying, I think there was a survey for fund managers or funds, and they were saying that 40% don't have any exposure to gold whatsoever, even though it's been the best performing asset probably over the last 2 years.
Yeah,
which
think
is quite
about that.
amazing.
That means 60% do. That's by Wall Street standards. That's not the most crowded trade. It's not like Nvidia or anything like that. But think about it. Like 5 years ago, nobody could even spell gold on Wall Street. Such a long word that it is, so many letters. And now for 60% to be exposed, that's a huge shift. That's what I'm talking about.
Yeah, great point. It is a massive shift. So yeah, I think one thing I've seen as well is, you've probably seen it, just the graphs of the accumulation that China is making of gold. You mentioned it before. We've also seen the charts. I think that Zero Hedge released one recently the other day, where it's the gold price versus the bonds, going the other way. As you said, it's sort of exactly when they weaponized the dollar. So it does seem to be that's sort of a major driver. This passive, it's now basically a passive buyer that's going to continue to buy as it continues to collect dollars, and it's going to continue to do that because it always has a trade surplus with the US.
And that aside, they also have a larger geopolitical agenda. You think the Chinese are happy to have the USA number one for another whole century? Of course not. They have ambitions. And so this is something, switching friends here. My fellow Puerto Rican, Brent Johnson, the dollar milkshake guy, I don't know if you've interviewed him, and I know a lot of gold bugs don't like him because it sounds like he's anti-gold, which is actually not true. He's long gold and he has his clients in gold. That's not his point. But I'm not going to defend Brent. That's not my mission right now. But what I like about his point of view is that he doesn't just look at the economic factors. And I think that's important, especially with something as central to international structures, and historically before the Bretton Woods and all that, and then maybe again now as the fiat experiment unwinds, gold is just so important. And wasn't there a U2 song about gold being the reason for the wars we wage? This is a real thing. Scrambling for resources is one thing, and gold as physical money is a medium of exchange. It's how you can accumulate these resources in a world of some limited availability. So what I'm saying about the analysis is it's insufficient to just say, oh, well, in the market economy, this would be the vector, and this is the rational decision on an economic basis. It would be inefficient to duplicate this, blah, blah, blah. There's all these, reasons why people give for X, Y, or Z, but they're just looking at it through the economic lens. They're not looking at it from the lens of, say, of Vladimir Putin, who doesn't care if it costs his country a lot economically to achieve his political ends. And I think the same goes for Xi. I think Xi does care, but that's not the only thing he cares about. He has a much larger agenda than just increasing China's GDP.
Yeah, and if they are, they're accumulating gold, they've sort of really filled their oil inventories recently. Obviously, Taiwan is something they want. So you wonder if this is a
And sorry, one more thing about China gold buying. They buy huge amounts of gold. China central bank, and that's just the central bank. Individuals buy gold. The government did a reversal, whereas before it was illegal to own bullion, frowned upon. Now owning gold is a good thing, and the government encourages it. Funny story. I remember the first time I went to China, it was still illegal, but you could buy a gold statue of Chairman Mao, because that wasn't hoarding gold. That was being patriotic. And you could buy a 1 ounce Mao. You could buy a 1 kilo Mao if you were really patriotic, right? So this is a big change in China. So you've got official accumulation, you've got the private sector accumulation. And the other thing that people often forget is that China is now one of the biggest gold producers in the world. It's a bigger gold producer than South Africa. So we can tell, or we have reports of gold imported through Hong Kong into China, and it's large amounts. What we don't have is what happened to all that domestically produced gold. How much is it really? Where's it all going? It's not leaving China, would be my supposition.
Yeah, great point. And I guess Russia as well is a massive producer, so it seems to be sort of remaining in that orbit. But yeah, bit of a shift. So going back to the US, and we've had some recent revisions of sort of job numbers and employment data, which is I don't know if you've been surprised about that, or does that just sort of show or sort of suggest that we are moving towards that stagflationary environment in the US?
Well, I would say it means we're there. I mean, the last revision was 818,000 jobs, just poof, stroke of a keyboard. Now it's 911,000. And maybe I'm easily amused, but that struck me. 911K is like, dialing 911. It's like an emergency number, right? 911. Not to mention September 11th, 2001. It's one of these crazy. I'm not one of these number analysts. I'm just amused by the appearance of this number. It was widely expected. It was telegraphed this time. Like after that 818,000 number last time, that really put it on the radar. It was such a big number. And of course, Trump firing the head of the BLS, that made it even bigger a deal. So this time people were expecting it. And I think people were partially pricing that in. When the number came out, actually the US stock indices sort of wobbled sideways and turned red. Gold went up right away. And then there was a reversal. And now everybody's in the green a bit because I guess everybody's deciding, oh, this means the Fed has to cut rates. Woohoo. But it's really telling I mean, like I was saying before, whether the Fed's going to cut rates or not is less of a big deal than it used to be for us as resource investors. But the lack of credibility that official statistics are getting now, I think, is actually great news. I mean, most rational people I met, they didn't believe those numbers to begin with. But the mainstream person was told, oh, the government certifies this is all, great. And Wall Street uses these numbers as though they're carved in tablets of stone on Mount Sinai or something. Despite the revisions, and never mind the yearly revisions that we're talking about now, just the following month, they always get revised, almost always down. So I think, just if nothing else, it's a good thing for the public to wake up and hopefully Wall Street to wake up, not to trust these numbers. But to your question, I think it does say that the consequences of economic policy, and by the way, I'm not putting everything at Trump's doorstep. We've got 4 years of Biden, and we had all the stuff that was done as a consequence of the COVID lockdowns. I think the piper is still to be paid on a lot of massive experimentation that's been done in recent years. And so it's no surprise to see that in stickier inflation, even before those tariffs started kicking in. And it's no surprise to see it in economic weakness, even before Trump's shock starts getting people laid off left and right. So no, I'm not surprised. I think, yes, this fits the broader view I've had really for years, that we're going to end up in a stagflationary environment. And I think that what's happening now in the US and abroad is just sort of adding wood to that fire, if you will.
Yeah, and I guess economics is a major driver for copper and copper sort of demand. So maybe we can go there. And it does seem copper sort of had a bit of a fallout the past few weeks. It's also I think I saw something whereas the gold to copper ratio is sort of at an extreme low because obviously gold's gone up massively. So what are you currently seeing in the copper? You said it's sort of was your number one investment for 2025.
Yeah, I have only a few months left to be right on that one. We'll see. So oddly enough, copper did hit a nominal all-time high earlier this year. But that wasn't for the reasons I gave. So I don't give myself pats on the back. I don't want to dislocate my shoulder on that one. That was because of Trump tariff scares. And then when Trump tariff reality hit, that trade that sent COMEX copper so much higher than London copper, right? That got unwound. So the reasons for my bullishness on copper, even more than gold, was that at the time last year, when I'm projecting forward into this year, Copper was still relatively cheap, and I didn't really know how bad Trump shock would be, but everything looked inflationary. So of my favorite metals that I was bullish on, copper was the relative cheapest one at the time, and I thought the macro context was bullish for copper. So that was it. It wasn't Trump tariffs. And so when copper went up to over $5 earlier this year on the Trump tariffs, people were congratulating me on my call on copper, but that wasn't why I said it. So I was just wrong. I'm happy now, not because I have to be right. I'm happy now as a long-term bull on copper, though, to see the correction, because I've been piling up cash to put into copper stocks, and I didn't want to chase the rally earlier this year. Now I'm glad I didn't. I'm not quite ready to buy yet because I'm not sure that we're done with Trump shock yet. But to be very clear here, I actually see the opportunity in copper as being better than oil, even better than uranium longer term. It is just absolutely, truly a critical mineral. I mean, they call it Dr. Copper for a reason, right? And so just population growth alone means we need more copper. Inflation, the macro context that I started with, that means copper is being a real thing that governments can't print, is likely to go up. And then on top of that, we have the electrification, the EVs. And yes, even if you hate EVs, you need to understand other countries don't. And they're adopting them as fast as they can. And that's going to take more copper. And then now on top of this, we have the AI thing. And okay, it was very funny to me that when that DeepSeek thing happened in China, that was suddenly more energy efficient, uranium dropped, copper dropped. Like everybody's like, oh, well, we don't need energy for AI. But that's ignoring all the other reasons why we need more energy and more copper. So I see the AI thing as probably a huge tailwind for copper. I mean, whether you believe in AI is a load of dingoes' kidneys or not, doesn't matter. The so-called hyperscalers, they're building these massive data centers. There is an arms race in this. I mean, even Putin has talked about AI as being an arms race and how essential it was for Russia to get there first. And the Chinese demonstrably are not to be left behind. So this is happening around the world. And it's going to require a lot of raw materials, including copper. So I'm just as bullish as I can be, bigger picture on copper. But it is still Dr. Copper, and we are still at that point where the other shoe, I think, is about to drop on these Trump tariffs. And people are so relieved that after so-called Liberation Day, many of the tariffs are not as high as they were, in that shock and awe back then. But some of them are higher, and they are now starting to be felt in the real world. So here's how I see it. I suspect we're going to see more opportunities to buy copper stocks at lower prices in the near term. So I've been building cash and waiting for that. If I'm wrong, I will miss those lower buying opportunities, but I'll still be able to jump on the bandwagon and enjoy a multi-year, if not several decade bull in copper, because the new sources of supply are just not there while the demand is going through the roof, right? So if I'm completely wrong, I still make money. Whereas if I'm right and I jump in now and I get a chance to buy things 50% off, next quarter, I will definitely hear about that from my readers. So partly my answer is as a newsletter writer, right? Or a person whose guidance people follow. I'm just very, very reluctant to give an all clear signal, go buy stuff if there's a significant chance of lower prices in the near term. But like I said before, if I'm wrong about those lower prices, there's still plenty of opportunity to profit. And if, dear audience, you disagree with me, you think the worst of Trump shock is done, the bottom is in for copper, then don't wait for me. You know what to do. If I'm wrong and those cheap prices are not coming, then it's onward and upward from here. Personally, I'd rather wait to see if I get those bargains. And if I have to pay a little more later, I'll pay a little more later.
Yeah, okay. Really interesting. And do you see, obviously, this is a bit of a different shift. Is recycling going to be a big issue for copper, or you think that's something that's
it's always been there. I mean, that is such a important and prevalent part of the industry that copper theft is a big deal. In one way, it's a measure of how hot copper is the number of headlines and stories you read about copper thieves and wires and cables disappearing from places. So that's always been there. And sure, you can recycle more, but the amount of copper that we need, it's not on the surface of the earth. I remember somebody, this was not in the most recent run up. I think this was maybe a year and a half or 2 years ago, when people were not talking about AI so much, but they were talking about the electric cars and how we were going to need something like by 2060, when the whole world is supposed to be electrified and the last internal combustion engine is turned off forever. Supposedly by then we need something like 5x more copper than we have now. And somebody was asking this person from an environmental group, where's that going to come from? And the answer was, oh, well, we just recycle. And you cannot go from 1x to 5x by recycling. You've got to mine the stuff somewhere. And the pipeline of projects big enough to matter to do this, it's not bone dry, but I'd say it's down to a drip. There are one or two really big world-class discoveries that everybody knows who they are out there right now, but those were decades in the making. And the next one, not even on the horizon. So yeah, I'm really bullish. And no, higher prices, sure, that will encourage more recycling, but that's not going to flood the market with recycled copper. We just need more than we have on the surface of the planet right now.
Okay, and today there was an announcement of Anglo and Trek sort of merging. Do you see that more consolidation coming into the market?
It's interesting. I'm not sure it really changes all that much. If you look at it, it's a merger of equals, supposedly. So it's not like somebody made money on the merger. And the rationale is this is going to save them overhead. Maybe it will, but it's also going to create a much larger company that, huge companies are subject to the costs of bureaucracy. And as much as I despise interacting with bureaucracy, I mean, you can't manage tens of thousands of employees around the world from the C-suite. There's got to be some layers of bureaucracy. So I'm not sure this is going to help as much as they say. And even if it does, okay, it saves what are now two separate companies some overhead costs. That doesn't change the copper market. It doesn't bring a pound more of copper onto the market that would not otherwise already be headed there.
Yeah, great point. It just seems to be a way to sort of ward off potential acquirers of themselves. They merge to make themselves bigger and harder to be acquired. It seems to be
Right.
what's
Well,
happening.
bully for them, but that doesn't do anything for the market.
Yeah, no, agreed. And in uranium, so you think that's, as you said, it had a sort of massive run up, I think 2023, and it sort of still continues to be, at the forefront. Nuclear seems to be coming through. There's been a shift in sentiment towards nuclear. So you still see this as something that's going to benefit in the next, I'm assuming, decade.
Absolutely. I think the moving goalpost of what the incentive price is for uranium. I remember when I started this business, it was like $30. We'd be so happy if we had $30 uranium. We could build a mine and profit. Now it's more like $70, $80 was the most recent number, but costs keep going up. So I mean, there are people who argue that at mid 70s uranium that we're at the incentive level and prices don't need to go up anymore. And I forget the name of the guy, the YouTube guy who was so famous for saying, "Oh, there's 1 billion pounds of uranium out there. There's all the uranium." Well, there's 1 billion pounds out there, but it's not all economic. And getting it out of the ground takes a lot of effort and time and money. And basically, all the uranium producers that are ramping supply back up again, they all are behind schedule, over budget, or have moved the goalposts. And for the up and comers, the juniors, are the ones either building a new mine or taking one that's been on mothballs and bringing it back into production. All of those companies are behind schedule, are revising their output figures, that sort of thing. So, it was reasonable to think that uranium, after that big run up in 23 to triple digits, over $100 a pound, it was reasonable to think that that was too much and maybe a correction would happen, which I did call, and I did get virtual Rotten Tomatoes thrown at me for not being a cheerleader. But I was right in 24, and it corrected all the way down to the low 60s. And now it's showing pretty good signs of carving out a bottom. And I'm not a chartist, I'm not a technical analyst, but if I add my fundamental perspective to looking at the chart, I like it when the two align, and the chart looks really good. So the chart looks good. The fundamentals look good. The demand, yeah, I don't need to rehash what you said. You put several examples for every one you said. There's 10 more out there. It seems like every day there's some new headline that's very bullish for uranium demand, while the supply is failing to pick up. So I think the incentive price is higher. And even if we were there, the pounds are not coming to market fast enough. And so I think we're going to see spot overshoot. I think it will go above the incentive price. I would not be surprised to see it go back to triple digits. Whether it stays there or not, we'll see. But on the way there, there's a lot of money to be made in the uranium stocks. Now, the one caveat here, well, actually, there's two. The uranium bulls hate it when I say this, but the one main caveat is always this is nuclear energy. And if there was a nuclear accident, even another Fukushima, where it was really the tsunami that killed people, not the reactors, that would definitely throw ice water on the uranium market. Maybe not permanently, as we've seen. It picked itself up after Fukushima, but maybe a Chernobyl scale event, that would be really difficult to recover from. So I think this is important. If you're going to put a lot of money into this, you need to understand that this is a speculation that can almost literally melt down on you. And you have to be willing to accept that. I think it's a very long tail risk. I'm long. I have a lot of uranium stocks. I don't lose sleep over this, but I know that it's there and I accept it. And nobody should go into the space without that. So that was the one caveat is this is things may not work out. The other thing is that the demand side, where you started with your question, Anthony, it's so obvious that even though spot uranium corrected quite a bit, the stocks did not correct that much. And they're not really, bargain basement buys right now, at least not the better ones. If you've got a uranium stock that just, is dragging along the floor, it hasn't moved up this year at all, the market is probably telling you there's something wrong with that company, because the better ones have all moved up with uranium. And so what I'm saying is I'm very, very bullish on this. I'm even more bullish on it near term than I am on copper. So that makes it a high priority for me to look for a great uranium pick. But I'm not the only one that sees this. So finding bargains is hard. And I'm a very simple old wolf, and I just like to buy low and sell high. I don't want to buy high and hope to sell even higher. The greater fool speculative strategy is just not for me. So I'm not saying anybody's a fool for buying right now. I'm just saying be careful and look for a compelling value proposition. And if you don't find one, wait for the next fluctuation. There always is something like that DeepSeek thing. It was totally irrelevant, and it put uranium stocks on sale. If you can't find a good bargain, markets fluctuate. That's something that's a reasonable thing to wait for.
Yeah, great point. So, Lobo, thanks so much for coming on the podcast there. And sort of we covered all the different commodities in all different places. But my last question is, what is one message you want people to take away from our conversation?
I've been thinking about this, completely unrelated, and it's not just by my newsletter. Actually, the number one message, somebody just asked me on social media, what's the biggest thing you've learned in your whole career? And I think that it's contrary to my mentor, Doug Casey. It's better to have a method that works reliably than to be lucky. Now, Doug, it seems to me, is just an extraordinarily lucky person. And he has told me before that he'd rather be lucky than smart. I think he's both. I think he's modest there. But relying on luck has never worked for me. Whereas relying on something that puts the odds in my favor has worked for me. And, you can swing for the bleachers on the latest fad, whether it's NFTs or pot stocks or, whatever it might be. And maybe you get lucky. Maybe you bought Bitcoin cheap and now you're a millionaire on Bitcoin. That doesn't mean it'll work the next time. A method that reliably delivers, in my view, is much more important than having gotten lucky once. And if anything, having gotten lucky your first time speculating is very dangerous, because it'll make you a gambler going forward and it'll set you up for failure. So I don't have a hot stock tip to recommend or whatever, but I think that's the most important thing I've learned over the decades I have in this business.
Yeah, I think that's an amazing message. So, Lobo, thanks again. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
IndependentSpeculator.com. We have a free weekly letter. You may or may not like it or the way I think. The one promise I have is if you sign up for that, we will not spam you with a flood of advertisements every day. I hate that. You get, one edition per week and a notification email.
Yeah, great, perfect. I'll put it in the description below, but thanks again for your time.
Thank you.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.